Hello, I'm Tara Kruse, Global Head of Infrastructure, Data and Non-Cleared Margin at ISDA. Global regulators around the globe are reviewing their derivatives trade reporting requirements with the aim of improving accuracy and raising transparency. To discuss how a digital approach can enhance reporting, I'm joined by Angus Moir, Head of Data Collection Transformation at the Bank of England, and Val Wotton, Managing Director, Product Development and Strategy, Repository and Derivative Services, DTCC. Angus, what have been the biggest challenges with trade reporting thus far?
Sure, so I think if we go back to the why of trade reporting, we go back to the financial crisis when regulators realised that they didn't have the information they needed to regulate the market and to ensure that the market in the financial sector was safe. There was all of a sudden this big rush to collect data. And I think in this rush to kind of collect data, certainly from both, I think, the regulator perspective and ultimately when it came to firms responding to those requests, it was quite a new thing, and they weren't perhaps the approach that they took perhaps wasn't always the best ways of doing things. And I think to a certain extent we've been on the sort of learning process over the last sort of 8 to 10 years or so, where over a sudden we kind of realised how, to a certain extent, not to do things, and also start thinking about, well, how can we do things? And if you look at the work that I lead, it's really about thinking not just what's best practice today, but what should be best practice in 10 years' time. And I think there's a couple of things that we really learned, which the work that I'm leading on is kind of critical things we want to address. So the first one is everything that we do in reporting really starts with data. And the derivatives market, to a certain extent, is quite fortunate in the sense that it already has very well standardized data and quite highly available data. What we found out, though, during this period is that actually more standardization work needs to take place, and the scope of that standardization needs to increase. The second thing, which is a really big focus for the work that I lead, is what we talk about as modernizing reporting instructions. So if you have a very strong standardized base of data, and that data is well managed and it's consistent and it's available, then that can allow and facilitate us to rethink the way that we request information. And one of the exciting ideas that we've been thinking about, which I know again the derivatives industry has been really leading on, is this idea that we can move away from publishing our reporting instructions just in natural language, where lots and lots of lawyers and policymakers and consultants and developers and business analysts get around the table and try to understand what the hell they mean and how to interpret them and how they map to the information and the systems that they have. But can we think about new ways of doing this? Can we publish our instructions in code, for instance, where rather than having to translate those things into code, those instructions are already in a native format where they can be plugged into systems. The logic of those instructions can be executed and the final report can be generated.
Thank you. Val?
Yeah, no, I'll pick up from what Angus was saying. I think data harmonization and standardization has been the key issue for the derivatives market. There's been a lack of standardization in the market more broadly, and as you say, reporting started 10 years ago. It's 10-year anniversary of the Global Trade Repository with CFTC going live, and we're at a key point within the industry where finally we're going through the set of rewrites and refits that are kicking off with the CFTC in December. And when we think about it, it's around those standards. So we had the LEI and the UTI, and now really with the implementation of the critical data elements, things like the UPI as well, and then the implementation of the ISO 222 standard, there's a real opportunity across the globe to drive harmonization and standardization of the data collection to trade repositories. And I think from our perspective, that's critical because the whole reason for having repositories was really to empower, especially prudential regulators, to look at aggregation of data across the globe, make sure we can spot systemic risk and avoid any kind of black swan event happening again. So for me, we're on a very significant journey. We're making strides. The regulatory community, with the clients, with ISDA and the broader community as well, have got a real opportunity through these refits and rewrites to implement these standards, looking at the digital regulation component as well, which can really transform the market and help facilitate good quality data. And as Angus says, which can be leveraged for multiple purposes.
You've touched on it a bit already, but what are some of the benefits of having a digital approach to trade reporting?
Sure. So I think if we start with the kind of the size of the problem today, and if you look at the cost, and it's not just across derivative reporting, across whole reporting, and I know the derivative reporting has been a big driver of that cost. One consultancy reckons it costs somewhere between £2 to £4.5 billion a year for financial firms to send data to the Bank of England and the FCA, to the UK financial regulators alone. And we look at what's driving that cost. I think a lot of it does speak to this whole interpretation problem and how firms understand our requests and then map them to the data. And secondly, I think it's about how firms are managing their data themselves and how easy is it for them to get data from different systems, to link it all together, and ultimately to supply it to the regulator. The other kind of critical cost, and I think which speaks to that, if the process is difficult and the process is expensive, it means the time it takes for us to get the information that we need is also a lengthy period of time. And so again, Val just mentioned it there, derivative reporting has been going on for 10 years, and 10 years later we're still having refits, we're still having big change processes, because we still don't feel like the data that we're receiving is what we need and will allow us to do what I think the regulators want to do with that information. And so I think one of the biggest prizes for us as an industry and as a regulatory community is the ability to get data much faster and much higher quality, and to change that information much faster than we have been able to do thus far today.
Thank you. Val?
I'll just build upon what Angus has said, right? I think he's hit the nail on the head. It really is around reducing the whole cost of implementation of regulation on an ongoing basis. Angus talks to the UK, but you think about global firms that have to deal with North America, now the UK and Europe, and then we've got all of Asia Pacific as well. The idea of actually having digital regulation, which is codified on an open source basis, where not only do you have the data elements, but actually you can build out the best practices on how to report fields more broadly, which all help the end game of ensuring that you have the right level of data quality, which allows aggregation, so as then the regulators and the broader community, even from a public reporting perspective, can maximise the data that's being collected, and quite possibly the billions of pounds that have been invested over the last 10 years trying to comply with these regulations across the globe. So again, we're at a critical point where it's really around how do we coalesce the industry behind it. We've got regulatory support, huge opportunity, and it will just drive down the ongoing cost of change, increase data quality, and hopefully lead to that end state where that data can be used by regulators and the financial industry far more broadly, Tara. So it's exciting times.
Exciting indeed, yeah. Go ahead,
Going
Angus.
to come back on this point as well, and I think sometimes we do miss this, particularly, and even I miss it as I just did when we talk about the cost is, we do always have to remember that this information is incredibly important. Why? Because what regulators do is important, and one of the things that really strikes me actually when I speak to people from industry about this topic is that people in the industry actually do fundamentally believe that reporting is important, that data is important, and they can unlock incredible value to us as a financial community, but also to the people who use the financial services and to the economies more generally. And so I think if we can get this right, there is an incredibly powerful story that we can tell about the ability for data and good quality data to really improve our ability to regulate properly, and for central banking perspective to do things like set interest rates and achieve a whole bunch of other different outcomes which we really care about.
It's also, we actually got to a point where we're co-creating across the industry. We're not sort of working in different pockets, and that's the case whether it's ISDA as an industry body, whether it's vendors like ourselves, whether it's the reporting entities and the regulators. That co-creation is really powerful when we think around digitalisation, where the broader world is going. That's where the power sort of exists, and so that's why I think it's super exciting. And you're absolutely right, it's around maximising the data, whether it's from a regulatory perspective, or there are so many other opportunities that firms can utilise that data for on the public side too. So exciting times that we really need people to coalesce behind.
Absolutely. Well, thank you. I look forward to seeing where this goes, and I appreciate your time today.
Thanks very much.